Everybody keeps telling me the same thing this week. Buy the SpaceX fund before you miss it. Wait,
Here is the funny part, Victor. You cannot get in early anymore. SpaceX just went public. Last Friday, anyone could buy it.
so the whole hurry up before it is too late thing is
Already over. And here is what nobody is telling you. Most of the so-called SpaceX funds people are rushing to buy barely hold any SpaceX at all. So this week I sat down and pulled the receipts. Let me show you.
start with the rocket company itself. Where did you even get these numbers?
Straight from the stock exchange and the company's own filings, verified. SpaceX started trading on June 12th at $135 a share. By the end of the first day, 161. June 16th, about 202. Up roughly 50% in 3 days.
50% in 3 days? That is a little crazy.
It is. And here is why. Only a tiny slice of the shares can be bought right now. So a flood of buyers is fighting over very little. When that happens, the price jumps around like a kite in a storm. The first real earnings report does not even come until September. So right now, you are buying a story, not the proof yet.
So most folks just grab a fund instead. You looked at 10 of them. Where do the fees come from?
Every fee here comes straight from the fund's own paperwork, the fact sheet and the official filing, verified. How much SpaceX each one holds, that changes week to week. So I marked those partial and put the date on screen. No guessing.
And how do you decide if a fund is good or bad? You are stamping some avoid.
3 simple questions. 1. What does it cost me every year? Because the fee is the one loss that is guaranteed. 2. How much real SpaceX am I actually getting? 3. How wild is the ride?
Wait, give me the worst ones.
One fund charges almost $3 a year on every 100 you put in. And you can barely sell it when you want. Avoid. Another one, you would be paying about $3 for $1 worth of what is inside. $3 for one. Avoid.
Ouch. Anything actually decent?
A couple is worth a look. If you go in with your eyes open, one holds the most real SpaceX of any normal fund for about $1 a year per 100. Consider carefully. Another looks cheap on the sticker, but once you add the hidden costs, it is really about $1.80 per 100. Watch, do not rush.
Hidden costs? Where is that from?
The fine print, right next to the headline number. Always read past the sticker.
And the cheap, boring ones?
Now we are talking. The plain S&P 500 costs about 3 cents a year on every $100. 3 cents. That is your yardstick. If a fancy fund cannot beat that after fees, why pay more?
Okay, if most of the hype funds flunk your test, what would you actually own?
6 simple pieces, and the biggest piece, Asham, is the S&P 500. That is just the 500 largest American companies, Apple, Microsoft, and the rest, in one basket.
People keep asking, where is the S&P? It is right here, the whole core.
Exactly. Then a little of everything else. One basket for companies outside America, one for steady dividend payers, one for bonds, the calm, boring cushion. One that is basically cash earning a little interest, and a small slice of SpaceX itself. For the dream.
Plain English. What is actually inside a basket?
A basket just means you buy many companies at once in one purchase, instead of betting on a single one. If one stumbles, the others carry you.
Say I am young with 100,000 to invest.
Then most of it goes to growth. And you keep a good chunk in cash, ready. If it grows at 10% a year, 100,000 could be around 160,000 in 5 years. That is an estimate, not a promise. I will never promise you a number.
And if I'm older, near retirement?
Then we flip it. Less in the rocket, more in bonds and cash. So a bad year cannot wreck your nest egg right when you need it. Younger money grows. Older money protects.
So why not just go all in on SpaceX and get rich?
Because one bad month on a wild stock can cut your money in half. Spreading it out is not about getting rich fast. It is about not getting wiped out before the good years show up. The boring baskets, they are the seat belt.
You keep mentioning cash on the side. Why?
because the market looks frothy right now. A rocket stock up 50% in 3 days? That is excitement, not calm. And history is clear. A drop of about 10% happens roughly once a year. A bigger drop stands every 4 to 6 years. It is when, not if.
When is the crash? Give me a date.
I will not. And please, do not trust anyone who does. Nobody can time it. What I can give you is a plan.
A plan I can actually follow?
Keep some cash ready. When the market falls about 10%, put a little in. Falls 20, put more in. Falls 30, more again. You buy slowly on the way down, so you are never all in at the top and never frozen at the bottom.
That is how you got to keep some cash?
That is it. The signs say be ready. History says a dip is coming, so we hold cash with a plan to use it, not a prediction, a playbook.
I like that. So if you are watching,
tell me your age in the comments, and we will build the right mix for you next time. Subscribe for the receipts, not the hype.
And remember, this is education, not advice. Talk to someone you trust before you invest.
Verified where we could. Honest where we could not. That is the whole game.